Today will be CPI day release, bratans. It's expected to come, the forecast 3.3%. The previous one was 3%. So in case it came lower than expected, so 3.0%, we will see pump in the market. If it comes higher to expected, we will see a dump in the market. And we see right now Bitcoin is retesting the daily 20 moving average. I explain you in a second what exactly is the CPI and what exactly it means for the bull run. In a second, let me quickly show you here the daily 20 moving average in case we are breaking it down, and we will break it down in case the CPI report will be higher than expected. So then we could see here a drop in the price to 25k even. But in case it came lower than expected, then we see a bounce in the market, and expecting that we will break through our massive resistance line at 30,300. And as soon as we break 30,300, the next price target is, as I told you, 38k. So let me quickly show you. Right now on the 10th August, today will be the CPI report. When exactly? At 8:30 a.m. Eastern time, so it's approximately 4 hours. The very important thing is, wait a minute, what is the CPI? The CPI is the overall change in consumer price based on a representative basket of goods and services over time. So basically, the Fed is measuring the inflation in the US market through the CPI. So how much more expensive will be your protein if you buy it? So that's not too expensive, because if it's too expensive, the inflation is going too much high, right? You understand? If you don't understand, please watch comedy, you understand, watch anime videos. So what is important? Because if the CPI is too high, how it was based on the past. So in the past we saw a CPI of 6%. So it means the inflation is over 6%. Then what happens? The Fed starts to increase the interest rates, and we are going into recession. As soon as the CPI is going down and the price target of the target of the CPI from the Fed is 2%. So as soon as it coming near to 2%, the Fed starts to decrease the interest rates. And now it's getting interesting, because if it's coming lower than 3% or at 3%, what we are expecting the Fed meeting is by the way in 41 days. We are expecting that the Fed will stay with the interest rates at 5.25 or 5.5 base points. So the probability is at the moment 86% that the Fed will stay at 5.25 or 5.5% interest rates. In case the CPI is coming higher than expected, so it's coming higher than 3.3%, then we will see the probability for sure switch that the Fed will increase even more the interest rates. By the way, I don't expect that the Fed will increase the interest rates even higher, because they cannot. If they increase even higher, the regional banks even already shitting in the pants. They're shitting all over the place, because they cannot handle this cost, because nobody want to borrow money from them, because it's too expensive. And not only that, nobody can borrow money from them, also the companies struggling to pay back their loans because the interest rates are too high. So I don't expect that all that it will increase the interest rates. But watch out, in case they will cut the interest rates, what they did, I mean, if they will go not by 5.25, but they go to 5 basis points, so they cut by 0.25, what it happens? You think right now, oh, it's nice if they even cut, so not stay by 5.25, that cut the interest rates. You think it's amazing, we are going to bull run. Wait, let us watch what historically happened. Historically, last year, 2020, the Fed said emergency 0.5 cut to the federal fund rates. And what happened? You see it here. We saw right after the news 2.5% post announcement bounce. So everyone like, oh fuck, we are going to bull run. And right then, followed by 4% sell-off. You see how they fucked you? They really fisted you in your anus. So be careful with this, in case they will stay with the interest rates. It's amazing, the relief rally is continuing. But in case they will cut the interest rates, we are expecting a massive dump in the market. And this also historically, not only 2020, but you see here, I put out here a chart, I draw for you the chart since 2000, and the red dots are showing us always when the Fed cut the interest rates. And you see this, we see the S&P 500, and when the Fed changed the rates, so always when they cut, you see the red dots, the S&P 500 start falling. You see the same it happened in 2008, 2009. You see they start cutting the interest rates, the S&P 500 started dumping. They always increase the interest rates when we see the S&P 500 pumping. So what we're expecting in case the Fed is decreasing, so cutting the interest rates, we will see a massive dump in the market. So watch out for this, bratans. Which news we have? We have more. We don't have any news for you, but be careful. In China, there are some problems with the real estate market. Very, very closely. Watch out, because I said to you, on the big picture, always watch the big picture, on the big picture perspective. Yes, I told you yesterday that we are, according to the Gaussian channel, we are heading right now back into a bull market. So we are officially back in the bull market because the Gaussian channel turned green. However, be careful, because based on the past, I turn off the Gaussian channel again. We saw always when when the Gaussian channel turned green, as you see it here, we still had the black swan event like in 2020, where we nearly touched the bottom of the bear market. So watch out for this. What I expecting here, we have still real estate commercial crisis, regional banking crisis coming. So we could see here pump to 40k, but after this pump of 40k, we could see still here retest of $19,000 or $20,000. The Bitcoin price, the bottom was at 15,000, so we could still here come down to retest here the bottom. So watch out for this, bratans. Very important. The total crypto market cap, watch out also. Very important, because in case we are breaking here this white line to the upside, it confirming us that we will see the total crypto market cap heading to $1.5 trillion, because this is the price target of this symmetrical triangle. You always measure from top to the downside. If we're breaking up, $1.5 trillion means Bitcoin at least at 35k. Also, I told you, it looks very, very it looks very, wait a minute, it looks very bearish for the S&P, for the dollar, because we see here right now a bearish divergence on the dollar. The RSI is going up while the price is going down. This is exactly what we want to see, because if the dollar is dumping, Bitcoin is pumping. And if we are watching right now on the daily, we see all the indicators showing us we should see a pump in the market right now, because if we are opening right now the market cipher B, you see it here, we see green dot, and always when we saw green dot, for example, here in the past, das Zuckerblät, wait a minute, I have to close this one, da job твою мать, блядь, here, when we saw the green dot appearing, you see here, we saw a pump in the market. Also, we see right now the MACD is forming a golden cross, the green line crossing the red line. You see it here, the same happened here. Right after we saw a pump in the market. And also, if we are zooming further in, wait a minute, I show you, we see on the RSI also a bullish divergence. I have to go on the next time on the computer so you see it better. You see it here, if we are zooming, this really, you see it here, the RSI is going up while the price is going down. So all three indicators clearly indicating us we should see here a bounce on the daily 20 moving average. It all depends on the CPI, bratans. If it comes today lower than expect, I expect a bounce and pump to the upside, but we have to break still 30,300. I show you also my trades. My trades right now, $258 in a loss, 70%, and my ARB position is $3,000, 70% in loss. I will stay in this position because I expecting still a bounce in the market, bratans. If you want, you can claim $1,000 bonus on Bybit, links in the description. Thank you everyone for watching. Kiss you, and see you later.